Okay, everybody, here we go. It's me, Gregory Mannarino, Wednesday, December 18th, 2024. To say the least, I'm laughing over here. Should I be laughing? I don't know. A very interesting day. We need to talk, people. So, look, yes, you read the title right. I closed every single one of my positions in the stock market. I have not a single dollar, not one in the stock market right now. I am fully in cryptocurrencies. I intend to stay there, at least for now. If I get out, I'm going to let you know that. I am in all my metals positions as well. Now, um, there are a few reasons for this. I want to show you and, of course, discuss what's going on here. So, look, man, it's kind of an interesting phenomenon, but not a surprise to a single one of you, not one of you. And this is why I love this so much, what we do together. When I'm going to go over here, you're going to go, wow, that's kind of interesting because you and I knew this was going to happen. We talked about it for an hour and a half freaking long, and it did. Let's talk about this. So this is the big deal. Okay. Seems like nothing, right? 25 basis points, quarter of 1%. The Federal Reserve cut. Look, man, as I said, the Fed was going to be hard pressed to do it in this environment of rising prices. But what did you expect? More currency devaluation. They're going to squeeze you and me to death. Death. That's what they want to do. And I mean that in the literal sense here. So the market priced this in, no doubt about it. But why did we get this? Let's talk about it. A pretty significant sell-off across the board. Do we need a pullback in this market? Oh, yes. You and I have been talking about this, but this is beyond the pullback. Let's talk about what happened today. How many of you remember that I told you over and over and over again that if we get a par, 10-year yield, federal funds rate, that the market was going to hate it? Well, not only do we get a par with regard to the 10-year yield and the federal funds rate, but the 10-year yield spiked way above that. This is close to the market end today. We're actually higher than this. Now, just so, again, I have covered this for weeks so many times that if this occurred, we would have a problem. We got a problem here. Okay. So, again, that's the 10-year yield. I think it's higher than that right now. Maybe when you guys want to check that for me, I think it's 4.51. The Fed, by cutting 25 basis points, brought the low end of the federal funds rate to 425. Okay, on the back of that, boom. Did we nail that to the wall? Now, okay, that's not the whole picture here. The fact is, we got a pretty rapid sell-off in the debt market. Now, look, man, Greg Mannarino, believe me on this one, understands that we need much higher rates than we have now, which obviously means a stronger currency, which would mean the stock market would get decimated. We are where no man and no woman has gone before. As a matter of fact, let me show you something interesting before we move forward. This is CNBC today. Nearly all the preconditions for a market bubble are met. UBS, okay, nearly? They're kidding me, right? Every single metric you can imagine here is obviously pointing towards this. And then we got this one here from Market Watch. Stocks are in the greatest bubble in the history of civilization. Sounds like something you and me would say. Whatever, but this market analyst is saying this right now. I mean, come on, man. Can we please get a duh? We all know that. People, look, let's be honest with each other here. Let's really do that, maybe. If you've been in this market with me, if you've been in the spots I've been in, people, look, man, let's tell it like it is. We've done incredibly well. Incredibly well. So, look, man, I'm out of this market. I'm now sitting in a very bad spot. I am in a boatload of cash right now. I don't want to be in a boatload of cash right now. I am not in the business of picking market tops and bottoms. The fact that I got out of this market, look at the MMRI today. Look at this. Look at what happened here. I admitted that I did not foresee us breaking out of the price channel here. That was the first tell that we had a problem. Now I think it's higher than this right now. The MMRI, we are clearly in the red. We're getting a big tail here, and look at the spike. Look at the spike here. This tells me, again, first of all, why has Greg Mannarino been screaming from rooftops that if we get a par federal funds rate, 10-year yield, Lion of Norway, love that, man. Bitcoin half of the portfolio locked in, half of the portfolio locked in. I just wanted to get out of the stock market, man. I still have not sold a single crypto position I own. Anyway, going back to the par issue, which you clearly see played out exactly how we said it would. I love that. I don't know how many of the people call that. And I'm not saying that I am anybody special because I am not. But I think I nailed it here. I think we nailed it here. We have the best tool, in my opinion, in the history of the world to gauge market risk. It's getting out of control. Now, the issue with the par here, federal funds rate, 10-year yield, is what I've been trying to explain to you is, again, the sell-off here, the market is going to now look at this as a potential. Now, I'm not saying this is going to happen here. We need to keep, I'm going to go back to this, our eyes on the MMRI. Again, people, this is free to everybody. There is a link in the description of this video. You can see this in real time. You don't have to sign up or nothing. You all know that. The fact that we are now beyond par. Okay, now the market, this is going to rattle the debt market, and it could precipitate, and I'm not saying this will, but what my concern is this could precipitate a larger sell-off in the debt market, which would absolutely devastate the stock markets very, very fast. So with regard to the market, there's three concepts that you have to know about. Be first, be smarter, or cheat. Sound familiar? Watch Margin Call tonight. That's part of your homework assignment tonight. Listen, now, as I said, this could calm down. The Fed could get in here tomorrow and start buying debt, hand over fist, pushing that 10-year yield down. That's all the market wants to see. If the Fed does not do that, we could see a much greater sell-off. Now, what I intend to do here, again, I am in a bad spot right now. I am in a big freaking cash position, which is obviously the worst place you can possibly be, because we have this mechanism of artificially suppressed rates, which means currency devaluation. You want to be in the dollar. Okay, we'll talk more about the dollar in just a minute here. So what I am going to do, and believe me, look, man, I sent out a triple alert that I got out of this market in my newsletter. It's free to all of you. Link in the description of the video. I put it out on Twitter. Every single one of my is Facebook. Everywhere that I wanted to get to you guys and let you know what I did. If in fact I see the situation changing, I will get back in here. But I want to show you something that's, look, man, that you really got to pay attention to. And I want to read something to you, and then I want to show it to you. And I want you guys and girls to focus on the chart that I'm going to show you, which is a big part of why I decided to sell it all today. I mean, all meaning stock, positions, ETFs. That's it. I'm still in my crypto spots. Don't ask me anymore, people, please. I got slammed already. I'm not getting out yet. Expect volatility in the crypto space. What did I tell you? You could see 70% sell-off. I don't want to see that with regard to Bitcoin here. We're being made the crypto capital of the world. There's all kinds of talk about this. You know that. But let's just put crypto over here for now. And I'm going to go back to that in just a little bit. So, again, if you subscribe, don't want to show you that first. I want to show you this. This is in your inbox if you subscribe to my free newsletter. I'm going to read this so you can see what's going on. So I wrote Lions. The Fed did cut rates by 25 basis points. I wrote this cut has now brought the low end of the federal funds rate to 4.25, which is below the 10-year yield. And as a result, stocks are falling, and they ripped lower throughout the end of the day. I said that, moreover, 10-year yield is rising pretty fast. And I wrote, obviously, the MMRI is higher. Now, I wrote, right now, the market setup is not looking good. Yeah. Now, I went on to say this, and a lot of you have a point here, but I want you to pay attention to this. All right. So I wrote, in a normal market situation, we do not have a normal market situation. The 10-year yield being above the federal funds rate is what you would expect to see. But we are far from that. We are having, this is not, nothing is real. You all know that. This is all an illusion here. Now, what I said here, this can potentially lead to a big sell-off in the debt market, which it looks like we may have had a little bit here. So what's the problem here with, again, look, man, you want to be greedy. Gordon Gecko, greed is good. You and I have been in this market for so freaking long. We could probably fill up a room with $100 bills. Okay. Greed is not good. You get out of the market, not when if you think you're at a top or whatever it might be. You get out when you see certain dynamics in play. And let me show you what I'm talking about. So we got this issue with the 10-year yield federal funds rate, the sell-off here in the debt market. Now, I want to show you something that I think you're going to find very interesting. Again, this is in your inbox, people, man. This is gold. What I'm going to show you right now is gold. All right. Really, this is gold, not Bitcoin, which Powell said is liquid gold, no, digital gold. This is gold. This is the relationship between the federal funds rate and the 10-year yield and related crashes. This was the dot-com bubble. The black line here is the federal funds rate. The blue line is the 10-year yield. So bear with me on this. .com, financial crisis. That's where we are right now. Okay? Are we on the same page here? All right. What I saw today, I didn't like it. Anyway, so with that, again, let's just go through this here. Not only did the stock market fall pretty precipitously here, 1,100 points for the Dow. I don't even know where I put it. I had it somewhere. I don't know. You guys and girls, here, look. I'm going to clean this desk up one day, I promise you. This is how we ended, pretty bad. And again, it's not just because the stock market fell or this is a pullback or correction. It's the action in the debt market. You understand? You're going to see idiotic comments here like, oh, the market drops a little bit and people panic. When you see that stuff, laugh, because these are people who have no idea. They're focusing on the stock market. What you and I are doing, what we've been doing forever. Focusing on the debt market because it's the key. It's the driver behind it all. And a meltdown in the debt market, what have you and I been saying for 10 years? It's going to happen. Are we there right now? I don't know. I promise you that I will be watching the MMRI, the 10-year yield, see where this all goes, looking for an opportunity if one comes up anytime soon to get back in here. I do not want to be in a cash position. What I am going to do, though, I'm going to tell you right now, I pulled out a lot of cash out of this market. I will be taking some of that and buying other assets with it. I intend to add to my metals positions. I'm telling you right now what I'm doing, people. You guys and girls do what you want, what you think is right. Will I be adding to my crypto positions? I might as well. If we drop here, again, what happened today was the market, of course, as it always does. Thank you, Paulo. I appreciate that. Throws out the baby with the bathwater. Look what happened here. Okay, pretty much across the board. Look what happened here. There we go. I told you all, you guys all know this, man. In a market crash situation, and I'm not saying that's what we have here. All right, I don't like what I'm seeing. I outlined all this stuff for you. Now, look, man, you like that? What Greg Mannarino has made for you here? Yeah. It's the key, man. It's the key, and it's in your inbox, as I said. In a market crash situation, and again, I am not saying that that's what we have here. Everything sells off initially. Everything dumps. And then you get a movement of cash seeking yield yet again, is what we're looking to get into suppressed assets. Now, this is how this is eventually going to play out. Are we there now? I really couldn't tell you. Look, man, we have an entity, the Federal Reserve and central banks, that have driven this entire thing into a freak show unlike anything we've ever seen in the history of the world, and then some. Nothing is real. It's turned into a gross distortion of reality on a scale that, again, I can't even get my head around, and I study this stuff around the clock. You all know that. So again, the market throws everything out. Let's throw out a hypothetical and just say we're in a meltdown situation with regard to the debt market again. This is just, again, that's where we are right now. It cut off a little bit, but you can see what I'm talking about here. Okay, why I was so concerned about this par with regard to the 10-year yield and the federal funds rate. I've been telling you this forever, guys. You go, so what you saw today, anybody here shocked? Really, honestly, have I done a good job for all of you? I have tried so hard twice a day to keep you guys on the right side of this, man. And I think together, because we're stronger, we have freaking done it. Honestly. Now, again, hypothetical, debt market sells off rapidly, or the Fed jumps in. The Fed can do whatever it wants. The Fed can create enormous amounts of cash out of nothing. Just hit digits on the screen. All of a sudden, it's there. And the Fed can get into the debt market and buy it all. That's what they want to do anyway. Why do you think the Fed and other central banks are in here artificially suppressing rates? Why we're getting calls to lower rates here? It allows the central banks to inflate. Again, they issue debt through one door. They create cash out of nothing. They buy it back through another and suppress rates here. Thank you, G. I appreciate that. Exactly. Yeah. Look, you see what this guy wrote here? Or girl, whoever? I want a real economy too. We don't have what we have here is an economic wrecking ball that's coming through via the mechanism here of artificially suppressed rates and currency devaluation. And we're going to talk more about that in a minute. This video is going to probably be a little longer. I'm just telling you right now, for those of you that don't like long videos. Okay, I know most of you do. Anyway, look, man, debt market will. Not saying now. It depends. The Fed can get in here tomorrow and start buying it all. They may do that, and the stock market will go full-on orgasmic over it, and put back 2,000 points. Don't matter. It don't matter. It's never, ever, ever wrong to pull profit. When you hear some imbecile tell, you sold XYZ too soon, you know you're listening to an idiot. Any experienced market guy knows that it's never, girl, knows it's never, ever wrong to pull a profit. Flash news alert. Thank you. Look, man, I am looking for an opportunity to get back into the market. I'm also going to put cash to work into a few other things as well. That's why you put, do you realize what I did today? Again, what have I been telling you? All of our accounts out here that have all these digits on the screen, they're not real until you convert that into something else. Today, I took that first step. We've been long this market for years. Okay, maybe it's time to pull some of those profits and reallocate that to other things. That makes sense to you? I think so. Anyway, look, man, debt market meltdown will precede a stock market implosion on a level that people aren't going to believe. Cash is going to move into assets like cryptocurrencies. I still believe that. And like, obviously, massively undervalued assets like gold and silver. So again, the market in a crash situation throws everything out. Everything gets thrown out, baby out with the bathwater. And then once the market figures out what's going on, then you start to see cash move. Again, it doesn't fly away to money heaven. Cash, there is no such thing as money heaven. Some of you think there actually is money heaven. There's no money heaven, all right? Cash just flies into other assets. It doesn't just fly to heaven because money heaven doesn't exist. Real heaven may exist, but not money heaven. You understand? That's what you and I have been positioned for all these years. Why? We've been betting against the debt, become our own central bank, holding hard assets, gold, silver more specifically, platinum, palladium. You know all this already, and gaining exposure to cryptocurrency. Sound about right to you? Are we on the same page? Now, we got to talk about a few other things. Something that the Federal Reserve is doing right under everybody's nose, okay? And they're not talking about it, but you and I already understand this. We're in a full-blown liquidity crisis. The cash is drying up here, and the Fed is precipitating that. How are they doing that? Most of you already know that the Federal Reserve is involved in an operation called a repo. What this is, this reverse repo mechanism, I want you to think about what I'm going to say, and because I want it to make sense to you. The Federal Reserve overnight passes vast amounts of cash back and forth between institutions. Now, why would the Federal Reserve do this overnight? What's really behind it all? It's to fool the system, to trick the system into thinking it's more liquid than it is. But the Fed, this is just the last year of the Fed's repo program. Do you see this? Smaller and smaller and smaller and smaller. So this scheme of trying to trick the market into thinking, thank you, Jeff. Tomorrow I'm going drag racing. This scheme to trick the market into thinking that it's more liquid by passing cash back and forth via the repo market. There's secretly, maybe, it's in your face. Again, the truth is always hidden in plain sight. But the Federal Reserve is reducing the size of their repo. This is creating a major problem. Again, an underlying issue. And you know this. If you've been with me for any length of time, I've been screaming from rooftops. The cash is, it's a liquid. The system is a liquid. It's a black hole. They got to come up with a new event, some reason to pull more cash into the now. UFOs, freaking whatever it might be. I have no idea. Okay. Nuclear, sniffers. Look, man, they're making you focus on this for a reason. Do you understand that? Well, all this other stuff is going on behind the scenes. Clemente, thank you. I appreciate that. Let's not even go there with the freaking, the mummy creature today. There's nothing nefarious going on. This is Biden. Nothing, Greg. Why are you making fun of me, Greg? I'm a nice guy. It's a creature. It's not even human in my view. Of course, look, man, they want you to focus. Whenever they want you to focus on something, they want everyone to believe this is some kind of a covert military exercise here. Obviously, that's not the case. That's where because they're trying to convince you that that's what's happening. Or they're searching for missing radioactive material. That didn't happen either. Okay. I talked to two friends of mine today, military intel guys. They're probably watching right now. Both of them are telling me that this is a cover story. It has nothing to do with reality. Annual dues. Thank you. I appreciate that. Anyway, guys. So look, man, lots of things going on here. Liquidity being pulled out of the system. This is by design, leading up to what may be, what will be. Again, look, .com. This is when we had the same situation that we got right now. Financial crisis, meltdown. This is today. You understand why I get out of this market and why I am still looking for a place to get back in? We'll see. I promise to that all of you know what I'm doing, exactly what I'm doing when I always do. Now, I want to move on to some more serious stuff. But before we do that, let's have a little laugh. All right. Congress wants a raise. So you all know that the government is slated to shut down on Friday, but Congress says they want a raise. Do you think that Congress deserves a raise? No. I think they deserve to be in prison, but that's raise, prison. I say prison. How about you? All of them. All right, look, man. One last thing I want to talk about. I really hope, and I'm going to open this up to you. When QE begins, I just want to look at this question. QE began in June. They started buying more debt. But again, what they're looking for, you have to understand what they're looking to do. You know what? Maybe we'll do that before I move on to this. The Fed can tell you anything that they want to. Okay. The bottom line is they want to pump more easy money into this market. They're looking for an excuse to go negative. They want to go negative with regard to rates here. We're already in an economic meltdown around the world here. We're being destroyed via this mechanism, but they're not done. They want to finish putting those nails into our coffins. You understand? This can happen. Again, they got a proponent now. The new guy, which was the old guy to sit behind the Resolute desk, he called for negative rates last time. Okay, the setup is very simple here. We're being bridged into a new system, a crypto capital of the world, not a constitutional money capital of the world, proponent of low rates. Again, there was no election. This was a selection. They choose the puppet they want. They need an excuse to go negative here. What's going to happen? I guess we'll see. But anyway, look, while we're talking about this stuff, I sent a couple of things out to you earlier. Again, these are in your inbox here. So this is one, the big con. What's going on here? Let me read this to you real quick. I wrote, we all know that major financial institutions like BlackRock and many others are buying up billions of dollars worth in Bitcoin. They have now become the new crypto whales. It's the banks, it's the institutions. We also know that there's a lot of talk about adding cryptocurrency to the U.S. strategic reserves. There is also a rumor that central banks themselves are buying Bitcoin. Now, I wrote, with all this, there are again more calls to sell U.S. gold, if we even have any left, to buy Bitcoin and crypto. Kind of an interesting. The United States, again, crypto capital of the world, We're going to be adding cryptocurrency to our strategic reserves. How they're going to pay for it, I don't know. Maybe they're going to sell gold. But this is an interesting article from Forbes about the BRICS here. So we, the United States, being thrust into becoming the crypto capital of the world. Lion of Norway, thank you. What if we'll maybe? It absolutely could be. Good question. We'll see how that plays out again. But what I'm trying to explain is we did not vote for this, and I don't think you want it. We're being thrust into the crypto capital of the world, transitioned from, and you know this was coming from a very long time ago, from the old system into the new system. The Fed already has it. They need an excuse to implement it. They have a guy here bridging the system for you. You're being thrust into it. Meanwhile, the BRICS, let me read this to you. This is Forbes. BRICS making good progress on their golden path. Now, BRICS countries have settled on using gold as a basis for their international exchange. BRICS countries have bought 6.6 thousand tons of gold as of late and increasing their global share of gold from 5% to 22%. And they're planning on adding a lot more. Now, the BRICS nations are discussing and creating a gold-backed currency called the unit. I didn't even know that. As an alternative to the dollar here. Obviously, Trump has threatened the BRICS, stay in Federal Reserve notes. They're laughing back. Again, central banks here, they're transitioning us along with their new puppet out of the old system into the new system. Now, personally, if I had to choose between becoming the crypto capital of the world and obviously the gold capital or a constitutional money system, it's a no-brainer. We want to be in the gold camp. I feel if you had look, you choose. Where would you rather be? Who do you think is ultimately going to win here? The crypto capital of the world or another system that's backed by a hard asset, a commodity, something that's been real money for thousands of years? Which one is going to win? People, it's a no-brainer here. We're being wiped out. We're being destroyed from within. You understand? From within. And I want you all to understand that. That's where we're going here. Anyway, the crypto capital is going to be the winner. Gold capital will be the winner. Exactly. You're 100% right. The gold capital will win, not the crypto capital. And especially, look, what they're doing. What have I been telling you forever? What they're doing is a consolidation of power. The more power that they can have in fewer and fewer hands is a key to the new system. You understand? That's why these institutions are loading up on this new on cryptocurrencies and everything else. We lose. You understand? We don't win here. This is not going to pay off the debt. I know you guys, some of you are in some kind of pipe dream. You got to up your medication that by somehow we're paying off the debt. We're all ending the Fed. We heard the same thing last time. Didn't happen. It's not going to happen. We're being pulled away further and further from constitutional money system or a constitutional system whatsoever. Okay. And unfortunately, it's not going to play out too well for us moving forward. But that's kind of the bottom line. You know, Greg is still the biggest. I have been probably the biggest crypto bull on the face. I've been the biggest raging bull in the stock market that you can possibly imagine, right up until what I witnessed today. And this was not just about the stock market selling off. Stock sell. It was about par with the federal funds rate and then some. It's about understanding what happens when we're in that kind of a situation. Are we on the same page finally? I hope, because some of you, again, you're going to be disconnected here. No likey. All right, guys and girls. No, we're not panicking. We never panic. And is it ever wrong to pull profit and sit back for a little bit? I don't want to be in cash. You know that. It's the worst place to be. I will not remain in a cash position for any length of time. I can promise you that. And again, I'm an open book. Everybody knows what I'm doing and when I'm doing it. I'm going to tell all of you right here on this blog, or if I don't get to do the blog, I'm going to tell you in my newsletter. So again, subscribe to my newsletter. Right, Spirit Child? Thank you so much, everybody. Anyway, you guys and girls want to talk about anything? Again, I covered a lot with you here. I don't even know if I need to review anything with you. You understand the dynamics in play. You're seeing what's happening. Let's be honest, okay? This family that we built, okay? People can say a lot about us, and there's a lot of people that put you guys down. Greg's Lions are this and Greg's Lions. A lot of people put me down. But I said, if we get a par with the federal funds rate, the market wasn't going to like it. Did we nail it? Yes, we did. Yes, we did. And what I want to see, look, man. Yes, I know about the scamdemic thing. Did you hear again? Look, man, I am not calling Trump out. I know you guys and girls hate this stuff, but he was out again talking about the polio vax. He believes in it. Blah. And I just find it kind of interesting. Again, Israel just finished inoculating or whatever they were doing over there to the people over in Gaza with this thing. And now Trump is like, oh, this just is coincidence, right? I don't know. Maybe it is a coincidence. Let me know. I don't like it. We already understand, and we've spoken about this many times. Thank you, Sammy. That I believe that they're going to thrust something like that upon us, something disfiguring. I've been telling you this for a very long time. This wasn't enough last time. I got to be very careful what I say. They will pull the video. All right. That wasn't enough. The 6 feet wasn't enough. They need something, a mark on the body, a disfiguring thing, which is what polio would do. Which, again, no mandates. They wouldn't need a mandate. You understand? If people start to see deformities in human beings, do you think people are going to just not run out? Because that's what they want. They want to create fear and panic. What better way to do that than say, oh, my God, I can get into this, can happen to me, can happen to my children. You see what they're doing here? I don't believe in coincidences. Maybe you do. I don't. Myron Envy, thank you so much. Yeah, I appreciate that so much. Newbie at 70. You know what, man? I'm not too far behind you. I'm almost 60. The same. Jeffrey, thank you, bro. Yes, indeed, Jeffrey, you are 100% right. A market correction is needed. We don't get them anymore, but it's beyond. This isn't just a correction here. I didn't get out of the market because the stock market fell. We all knew it needed to happen. I got out, as I've just outlined. Maybe you just got here because of the federal funds rate. What happened? The spike in the MMRI broke over 300. But look, it doesn't mean the Fed's not going to jump back in here. Just be ready for what the Fed may do. They could get right in here tomorrow and start buying everything and suppress the bond yields, the 10-year yield in this case. And then in that case, the market's going to go up. But I tell you something, if that does happen, let's just throw out a hypothetical. All right, right now I'm sitting in a cash position. I already told you, I'm out of the stock market completely. All right. You all knew that before this video. With that, I'm going to sit back here. I want to observe this, where we're going before I do anything. And I'm not just going to jump in here full bore. I will kind of, if I decide to get back into the market, which I want to, I like those dividends, those monthly checks you get. You can buy and do anything you want. It's a nice way to create cash flow. I want that. But we just need to reevaluate and be very cautious about the situation here. We got these freaking UFOs, which they want you to focus on, and they'll try and convince you that this is some kind of covert military exercise, which tells me it's not. You understand? Anyway, guys and girls, we're pretty much on the same page with this whole thing across the board. And so before we get out of here, is there anything you guys and girls want to cover or you want me to re-talk about here? If you missed this video, especially the beginning where I spoke about what's going on here, and again, focus on this. This is in your, if you do not subscribe or have not yet subscribed to my newsletter, link in the description of the video, you can still find this. Subscribe and then search for this, and you'll see this is important. And it shows you what's going on here, where we are today, the last time this happened, .com bubble, financial crisis, and where we are today. I don't know who else is going to show you this kind of stuff. And this what happened today, I mean, no surprise. You and I knew this would happen. If we got a par with that federal funds rate, the market was going to hate it. Certainly played out to be so, huh? Anyway, look, guys and girls, that's the situation. That's where we're at. We got this. I'm telling you again, they can do whatever they want to. You and me, we're going to do what we want to as well. Nobody dictates our lives to us. We do what we want to do. We're free. You understand? We really are free. Even though they want to make us slaves, we're not slaves. You understand? The general population, they're a bunch of freaking slaves. But not you and me, man. Anyway, look, guys and girls, I'm going to ask you to please share the video. Please comment here. Those thumbs up, please. We only got 1,500 thumbs up with over 5,000 people here. Please give this video a thumbs up. If you got anything out of it, please give the video a thumbs up. I want people to see this stuff here. And you guys and girls are the key. You give these videos a thumbs up, the algorithms like it. You comment, the algorithms like it. And if you share this stuff on your social networks, I would be very grateful for that as well. Let's try to wake up some more people here. All right. I guarantee you that a lot of people are going to start talking about Greg Mannarino just closed all of his stock positions. This is probably going to get out there via other YouTubers and stuff that follow my work, and I appreciate that. I want people to know what's going on. I want people to, again, not be greedy. And we're not in the business of calling tops or bottoms, but we are awake, we are aware, and what we're seeing here in the debt market, which is the key to this nightmare that we're in, doesn't look too pretty. Doesn't mean the Fed's not going to jump back in here, people. Be ready for anything. Expect the unexpected, even the unbelievable, even the freaking unbelievable. Sound about right to you? MMRI is at 303, huh? The MMRI, by the way, in case you don't know, registers overnight as well. It doesn't turn off when the market closes, so you can follow it overnight. I told all of you, what did I say this morning? I said, I'm going to watch the MMRI all day. Remember I said it in this morning video? I watched the MMRI and bam, shot up over 300. We are now in a red zone. People, what else do we need? What other proof do we need here? Okay. We'll get back in here. Maybe, maybe not. Maybe this is it. I don't know. And I frankly don't care because we're still in the right spots, you and me. In everywhere. Mentally, physically, spiritually. We got this down and we got each other's backs always, man. We're a family, all of us here. I love all of you guys and girls. I mean that. What do I got? All right, guys. We're going to go. We're going to part ways for a little bit again. Thank you for being here. Thank you for your support. I really mean that. If you have not subscribed to this blog, please do so. And to my newsletter. I want to help all of you. And I've been working at this for years and years and years and years now. All in all, I think we've done a good job together. I think as a family, we've done this. We really have. Greg, literally nothing is happening. Really? Okay, I guess we can all go home now. I'm just reading this comment here. Enjoy the decline. I love that. I mean, I know it's a play. I get it. It's pretty cool. Anyway, that's it, guys. All right, I will see all of you in the morning. We got this. It's going to be beautiful. Everything is beautiful. Everything is beautiful. I won't quit my day job. All right, I'll see you in the morning, people. Until we meet again, please take